SoFi's stock price has been going down significantly. After the company released its second quarter report, stock prices continue to dip. Is this a SoFi meltdown? Is the company crashing? Or is this a great opportunity for long-term investors to buy at a discounted price? Get your shovels ready, because we're about to dig deep. Welcome to Wealth Gambit. On this channel, we cover the latest stock trends and research. If you like that type of content, be sure to like and subscribe for more weekly content. Also, please note that we are not financial advisors, so please do your own due diligence. Anyways, let's get right into it. Before we get started, let's first go over a couple words. Market cap and buying the dip. Let's start with market cap, which is short for market capitalization, which is how much a company is worth according to the share price. For example, let's imagine there's a guy named Mark who's an ordinary employee, and before he gets hired by a company, they'll need to know a couple things about him. There are ways to do that. The company could communicate with his contact references and ask people about him, or go through his educational background, work experiences, and even look at his bank account to know about his assets and liabilities. Now let's imagine that Mark is instead a company. We'll call that company Mark Inc. So how do we know the market cap of Mark Inc? Just like we did to Mark the human, we ask people. And the simplest way to ask people is through surveys and questionnaires. The simplest way to do this is to know the company's share price. Let's say Mark Inc.'s share price is $15 per share. It will then be multiplied by the number of its outstanding shares. Let's say 2.5 million outstanding shares. It would give us a $37.5 million market cap, also called market value. In math, we have basic addition, subtraction, multiplication, and division. But we also have calculus, which is on another level. Valuation also has it. It's the fundamental valuation. Here, you won't just base it on the share price, the number of shares, or market cap, but we'll look through the financial reports, taking in all the important details such as assets, liabilities, net income, book value, and the like. Lazy investors often base their decisions on just the stock price. As a result, they tend to, on average, buy high and sell low. Nikola. No wonder why Warren Buffett tells most people to just invest in the S&P 500 index. So, what about dips? Buy the dip is when the asset price continues to go down, but instead of panic selling, you go bulk buying because you believe in the company long term. Imagine if MacBooks suddenly went on sale for 80% off. Would you panic? Or would you be like, dang, that's a really good deal. Time to buy a ton of MacBooks. But let's say, for example, that Nikola stock dropped 90%. Well, definitely wouldn't buy Nikola before, but 90% down and we still wouldn't buy, because the key to buying the dip is that you only buy good/great companies on the dip because they have a strong chance of recovering. Otherwise, you're just trying to catch a falling knife, and that's no bueno. In the case of SoFi, is it crashing or dipping? Going over its current market cap, SoFi, with a stock price of around $14, has a market cap of around $11 billion. SoFi's book value is currently around $4.5 billion. To get the book value, you take assets minus liabilities, and voila, book value. So now, let's take a market cap of $11 billion and subtract the book value, aka net asset value, of the company, which is $4.5 billion. That leaves us with $6.5 billion unaccounted for. SoFi's Q2 2021 revenue was $259 million. So if we times that by 4, we get an estimated run rate of $1.03 billion in revenue per year. If we extrapolate that out, that means that it would take roughly 6 years at $1.03 billion a year in revenue to break even. Not bad. I know this has a lot of holes in it, but this is just for perspective. We will release a very in-depth video on their financials in the future. Until then, this is all you get. And like and subscribe if you want to see that future video. At Wealth Gambit, we personally own SoFi stock and are really bullish on the company. That being said, we've done quite a bit of research, so we'll go over some of that now. Here's what Commander Noto said about SoFi's second quarter report. The second quarter proved to be another quarter full of milestones for SoFi. We exceeded our financial expectations, delivering record adjusted quarterly net revenue and our 4th consecutive quarter of positive adjusted EBITDA. We drove our 8th consecutive quarter of accelerating member growth with even faster growth in cross-buying from our existing members, increased our Galileo account base to nearly 79 million, and raised nearly $2 billion in our successful transition to a public company. We accomplished all of this by focusing on our members and our mission to provide them with the right financial products, services, and advice for every major financial decision in their lives and every day in between. Shouts out Commander Noto for those insightful words. Let's look closely at SoFi's numbers. Starting off with SoFi's overall growth in their products, it has soared more than 100% quarter over quarter for the last 4 quarters. Next, we have SoFi's financial services, which have skyrocketed up to 243% year-over-year growth and a 14% year-over-year growth in its lending services. Not just that, but SoFi's Galileo account has been soaring as well, with 119% year-over-year growth. SoFi's net revenue also went up to 74% year-over-year. Now, the million-dollar question. If SoFi has been doing really great compared to last year, then why does the stock price continue to dip? Well, let's take a look and see what good old Jeffy B, aka Jeffy Bezos, has to say about this.
whole period is very interesting because the stock is not the company and the company is not the stock. And so as I watched the stock fall from 113 to 6, I was also watching all of our internal business metrics, number of customers, profit per unit, everything you can imagine, defects, etc. Every single thing about the business was getting better and fast. And so as the stock price was going the wrong way, everything inside the company was going the right way.
Jeffy B, aka Jeff Bezos, is the richest man on the planet for a reason. His quote, "The stock is not the company, and the company is not the stock," is a OG hood classic. If he got carried away by the downfall of Amazon's stock price, panicked, and sold, he would never have become the richest person in the world. What we're saying is, the stock market price does not determine the company's progress. The stock market changes, stock market prices change every single day, but that doesn't necessarily correlate to how the company itself is doing. In our opinion, there's no reason to be scared if you have studied a company's fundamentals thoroughly before investing, as said by Uncle Peter Lynch. Going back, SoFi as a company has been doing amazing, but since they released their second quarter results, investors may have overreacted to its second quarter loss of about 165 million, and this could be the reason for the stocks dipping. And to dig deeper into SoFi's Q2 losses, which may be one of the reasons for the stock price dip, SoFi is fully aware of their losses. The company explained that it was highly influenced by the deferred tax liability of their recently acquired company, which is Galileo, along with the non-cash stock-based compensation and fair value changes in warrants. A lot of these expenses, according to Chris Lapointe, SoFi's CFO, are one-time transactions. We here at Wealth Gambit have been buying up as many shares as we can, and we're not alone. So has Anthony Noto, who purchased over 21,000 shares at around $14 a share. Whether you decide to buy the dip or not is solely up to you. After all, we're not financial advisors, and this is not financial advice, but hopefully this information has helped you along with your decision-making process. If it did, please be sure to like and subscribe for more weekly content. And that about wraps it up for this week's video. So until next time, peace.